Welcome to the Army Empire Podcast, your go-to podcast for insightful tips on investment strategies, entrepreneurship, and all things money matters. Join Bernard Alerte, your guide on this journey to financial freedom. Each episode will dive into expert advice, practical strategies, and inspiring stories to help you take control of your financial future. Whether you're an aspiring entrepreneur or a seasoned investor, we've got something for everyone. So get ready to unlock your financial potential and make your money work for you. And now, let's welcome your host, Bernard Alerte.
It's that time.
Yes, it is.
Welcome to the Army Empire Podcast, friends. We are so glad that you are here. Bernard, how's it going over there?
Doing great. Very excited. Got a lot of stuff happening. We actually flying up north in a couple of days to help another client with so we're excited. Very busy next couple of days. Very excited.
We are so glad that you took some time to hang out with us again this Tuesday at 8 o'clock to share some of your wisdom once again to your apprentices here online on social media. So whether you're watching on Facebook, Instagram, or YouTube, as we always say, welcome to the Army Empire Podcast. Share this with someone because there's always so much great financial education for each and every one of us. So what is the topic for today? I have my paper and pen in hand.
The topic is going to be it's going to be actually a demo more than anything. We talked about find your money, right? Find your money. And we talked about last episode. We're talking about getting a financial needs analysis done. And a lot of people are concerned. I was thinking about it. What does that entail? So sometimes people get nervous to doing something unless they know what it entails. Like, should I do it? How detailed is it? And things like that. So we wanted to give it like an idea what it looks like. So we actually had an example of a financial needs analysis being done, what it entails, what's necessary to have that, so people can see how powerful it is and how every single person needs to get one.
Okay, so we're about to do a demo of a financial needs analysis right now?
Yes, exactly.
Oh, okay. This is
Absolutely.
cool. All right, so we're going from where's your money to
Let's find your money, right? Let's find your money, April. That's a theme. Find your money, April, right? Exactly. So how do we find money? So this is a sample to have a financial needs analysis being done. So I'm going to go over exactly pretty much. If you look at the next slide, right? It talks about, if you're like most people that's in the dark, we pay bills every single month and the best to prepare for the future. But the truth is there's only so much money to go around, and prepare for the future can be overwhelming. And that's what happens to so many people. We're like, no, you can get plan done. Like, oh, can I really do it? And the answer is yes, but it requires a lot of kind of digging in. Makes sense? A lot of planning to be able to get that done,
Okay.
So if you look at the next slide, who could benefit? Who could benefit from a financial needs analysis? Number one, anyone with children can benefit from this, right? Anyone with debt, right, can benefit from this. Anyone who plans to retire someday can benefit someday, or anyone that lacks a strategy for financial independence, right, can benefit from it. Because we talked about last week the road to financial independence, right? Anyone that wants to have, because before there's no way you can get somewhere unless you have a way to get there, right? We talk about most people don't plan to fail, they fail to plan. And this is a part that you want to have a game plan. You want to have a financial GPS that's going to help you get to where you need to go. It's almost nearly impossible. It's close to nearly impossible to get somewhere unless you have a plan to get there.
True.
It's impossible. There's no, I'm going to get there, but you don't have a plan that you can follow that is going to help you on track, or that you can adjust. It's chances you get there second to, or it's just not going to happen, It's not going to happen. So this is why we want people to know what entails a financial needs analysis, right? So what would someone need to have financial needs analysis? What information would someone need? Here's what it does. The financial needs analysis looks at 5 basic sections and the information received from each. Right? Number 1 is debt solution. What it does, it kind of illustrates strategies to show how to pay off credit card debt loans in the quickest, most efficient possible with little or no additional cash outlay. A lot of people like, I want to pay off my debt, but I can't afford to add any more money to debt, right? So it'll show you a very specific strategic way to pay off the debt. We're going to show you how that works, right? Saving for retirement, offer scenario to show you how much money you need to set aside for retirement. Like we talked about last week, what is your financial independence number, right? And how much money you need to have, right? I mean, and a lot of people don't even know what that number, it will tell you exactly what that number is, right? Some people have kids, education funding, right? People have young kids. Like, I don't put my kids, how do I know if I'm putting enough in my kids' education? This will actually project actual costs of specific schools. We can actually put specific schools in there. It'll tell you the current price of the schools and how much it might because of inflation in the future, it might cost, and it'll give you an idea how much you would need to for kids' education.
Get out of here. For real?
It does that, absolutely, right? Actual schools, you can actually put school. I want my kids to go to Princeton, Yale, one of the schools, right? St. John's, whatever school, it'll tell you exactly how much it'll cost, right?
That's cool.
Income protection number, right? It shows you ways, strategies to ensure your family's future if you pass away prematurely. How much life insurance you need, which is we talk about the three most important numbers you want to have is, other than your social security number, is number one is your financial independence number. Is the second one is your debt freedom date, right? Mm-hmm. And the third one is your income protection number. How much protection you would need to make sure if something happens, your family will be okay, right? And the fifth aspect, it'll show you how to build your financial future, plus all the information together, outlining specific steps to put those plans into action. So it'll pretty much anything financial you want to be able to, it'll show you how to do it. Make sense? So what is some of the information we would need? What is some information like a family would have to gather to be able to make sure we do an accurate financial needs analysis, right? For example, the process is very easy, right? Simply have the following documents on hand so someone can help you have an accurate picture. One thing I don't like to ask questions like, oh, how much we want to know actual numbers, okay? Because like you heard us say, garbage in, garbage out. If I put the right information in, I'll get the right information out. But if we just guess, put anything, well, how much you in debt? Oh, around 3,000, around 2,000. If it's like, and if it's 4,000, that makes a big difference. That makes those things make a big. How much you interest? I think it's 18 or 15, but it's actually 21. That makes a big difference, right? How much life insurance? Yeah, I think it's 50,000. So you need to have accurate. What are some recent pay stubs? We want to make sure sometimes people don't realize there's money coming out your checks and you don't even know what the money comes out of your check, right? People don't realize how that works. We have someone, they have a bunch of money coming out their check. But why is this for? They didn't even know what it was. They just assume but it could be something. So we want to find out because we want to find out how much you're paying in taxes, how much is going towards if you have 401k, how much if sometimes you have health insurance, how much is coming out of health insurance, right? We want to know the paychecks. We want to have like at least a pay stub to be very accurate. And people don't have checkbook registers, but if people try back in the days, people used to write, right? But everything's online. Everything's online now, right? Back in the days, parents have checkbook, so it's different, right? Savings and investment statements, right? You want to have that handy. Retirement plan statements, that's important to have that. Any 401ks and any statement your 401ks. Because we can look at a 401k and look at, for example, maybe you're not diversified the right way. Maybe you're too conservative. Maybe you're too conservative. That can make a big difference in your financial. Maybe you need to be more aggressive in your investing, right? Company benefit statement, life insurance policies. What do you have? You want to have the policies handy. You don't want to guess. I think I have this, because we want to be accurate as possible, right? You'd be surprised. 90% of the time, people say, I have this kind of policy. I'm paying this much. I have this much coverage. 90% of the time is inaccurate when we look at the policy. 90% of the time. Very rare when someone says, well, I have 150,000 and I'm paying this much. Usually you have a lot less and you're paying more. And it's just the reality, right? Life insurance policy, mortgage statement. So we can look at how much you're paying principal interest, escrow with taxes, PMI. You might be paying PMI. That's important. Like, for example, people might be paying PMI, which we talked about before. That means sometimes when you first get a mortgage, you pay like private mortgage insurance.
Insurance, yeah.
Exactly. So if you have less than 80% equity, that means loan to value, banks make you pay PMI, private mortgage insurance, right? But sometimes if the value goes up, is more than 80%, right? Less than more than 80%. So you actually have built more equity. Sometimes people are still paying the PMIs. They don't realize they can take it off sometimes. And PMI could be $100, $200 a month extra, so this is more. So we want to find financial and tuition statements. And also, if you look at bottoms, they'll cut down, but loan and credit card statements, we want to actually have that information too. So those are the things that someone would need to have put together for us to be able to spend some time doing accurate financial needs analysis. So what information do we gather? How does it look? This is the data sheet that we fill out, so you can see pretty much, right? We have a fictitious client called John and Jane Doe, right? If you look at it, with John and Jane Doe, we have the birth dates there, right? And they have 2 kids, right? Tammy and Timmy Doe, right? With fictitious birthday. So if you think about it, right? John is 40 years old, and Jane is 38, right? So it gives you an idea. So this information we'll ask you for. We'll never ask you for Social Security information, private information, unless we're doing a financial product, an application that we would need that. But that we don't ask that up front to do a financial needs analysis. Make sense? Mm-hmm. So if you look at the next slide, right, we ask like for where you live. Very simple, right? 1, 2, 3, 4. We put anywhere street, right?
Yeah,
right?
that's good. That's good.
All right. Very simple information, right? If you look at the next slide, go through real quick. We'll ask you, for example, John's income. We'll ask you John's income. This is always important for us to be able to have a pay stub, so we actually can see how much every month, right? The gross income, right? Like we estimate John is making $4,100, which almost $50,000 a year, and also Jane also $50,000 a year, and they're paying, let's say, about 10-12% tax bracket, so they're paying $450 a month in tax. For $450 a month comes out of taxes, right? Sometimes a little bit more, but we just estimate that, and we also ask them, do you get a refund, right? So this information we gather, right? So if you look at the next line, right, this is the next slide. We want to ask, well, what age would you like to retire? So this estimates, for example, they want to retire at 67. Because one of the questions we ask, well, listen, Mr. and Mrs. Klein, at what age would you like to retire? And the answer I hear is always now, right? Tomorrow. They ask them, okay, let's say you can't retire tomorrow. Let's say in a future, like realistic way, right? So this, we might say like 65, 67. Okay, that might be a number, right? 65, 67. And we estimate how much and they would need for retirement, right? So this information we ask, right? If you look at the next slide, we ask them, for example, how much you have saved retirement assets, right? We ask them questions, how much you currently have saved for your retirement. So this is why it's important for us to have a 401k statement so we can see how much you actually have accumulated. Because sometimes we ask how much you have saved 401k. Well, I think I have 10,000. I think I have 15,000. You realize it's a lot less or a lot more.
Correct.
Right? They underestimate or overestimate, right? And how much and this is what we can see how much you're putting aside every month, right? That comes out of that paycheck, right? Every month. And also we want to find how much you have saved up in non-retirement assets also, which is important. Okay. And sometimes there's a powerful question we ask them, are there any savings from previous employers? Sometimes we ask that question because sometimes they may have retirement 401k or from an old employee they didn't even touch. All that makes a difference. Sometimes they leave a job and they just leave the money at the former job. So we want to find that out. And if they have, did you roll that money over to an IRA or something? So we can ask that question because we want to find money for you. Money that's not working for, that's just sitting there, not doing anything that people are not aware of. Every little bit counts over a future, right?
Yeah.
So we ask that question. Again, we look at budget sheet, right? We look at, for example, how much someone's paying. Let's say we ask them those questions. Yeah, detailed questions. How much you're paying for your cell phone or cable, electricity. We estimate some numbers for this family here, right? $300 electricity. You guys can see it, right? And if you put a full screen, right? We'll tell you exactly. We'll ask information like that. Like, for example, how much you're paying for your cell phone, cable, right? Electricity, gas, right? Different things like lawns. If you have someone that cuts your grass, restaurants, how much you estimate restaurant eating out sometimes, right? Entertainment, all these different questions. So those are the questions because we want to find how much we want to find the money, but we're only going to find the money if we know what's happening. Sometimes you might have.
So this here is a present snapshot. You were talking about, what age you want to retire, and that was more future. This here is what's happening presently when you sit to have this financial needs analysis.
Exactly, 100%. So if you look at the next slide, which is a continuation, if you put a full screen, for example, how much you estimate food and groceries, right? You estimate to pay food and groceries, clothing, things like that, charity, maybe you're tithing to your church, right? How much you're paying for health insurance, right? Car insurance, ask those questions, right? And it tells us exactly like a shortfall or something, right? So when we get all that information on the financial needs analysis, the first thing it does, which is the most important part, we get all that information, and what the computer does, the program generates something called, if you look at the first slide, which looks at your financial position.
Yeah. Okay. So this down here at the bottom, this light blue square, it calculates what your disposable income is.
Your shortfall. In this situation, this family has a shortfall.
Yep.
That means they're spending more money than actually making.
Wow.
So that's a problem, right? So if you blow out the full screen, right, it looks at your financial position. It actually tells you where all your money's going.
That's awesome.
Everything where all your money's going, how much is going towards insurance premiums, how much is going towards savings, debt payments, taxes, living expenses, right? See our goal is what we want to do is you see the little pie charts here?
Yes.
Our goal when we sit down with someone, we want to make sure that we show how to cut a little bit of debt payments, right? Maybe cut a little bit your insurance premium, maybe cut a little bit your living expenses, and maybe if possible, cut a little bit your taxes so that savings pie gets bigger. Our whole goal is to what? To get that savings pie become bigger, right? And ultimately, the ultimate goal, if you look at the bottom, is we take a look at your net worth, right? Your net worth is actually your assets minus your liability, is how much you're actually worth. So look add up all your assets minus what your liabilities, what you owe, and it gives you net worth. And our goal is to increase your net worth over a period of time.
That's so good.
Exactly.
Yeah, that was really important. Hopefully y'all screenshot that because that was a really good slide. That pie is a perfect visual for us.
People don't know. If you ask, but what is your net worth? No one knows their net worth. Very few people. Some people do, but less than 5% population can tell you, I know what my net worth is.
Wow.
And that's sad because net worth is actually what you're worth.
Yeah. This is the first time here in the Army Empire podcast that we actually do a financial needs analysis demo.
Yes, absolutely. Hunter, we feel that'll be good for people to see that, to be able to see that perspective. Now, this is the retirement, right? Now, we got all that information. We find a person retire, and this is the results that popped out, one of the pages, right? For example, if you look at the fly's making $8,200 a month, right? And 80% of income at retirement. So here's what people don't realize. Income today, if you look at income today, 6550, that's 8% income. See, in future, right? That person would need to have to make $14,600 a month at 67 to have the same lifestyle that 6,500 generates.
That's crazy, coach. Crazy.
Yes, exactly. So if you look at the warning, right? It's a warning. This is where you stand. And it'll tell you, it says very simple, you will not achieve your retirement goal of $65.60 a month. Due to inflation, your projected income will be $14,600 first year to So what it tells you, so this is where you know your financial independence number, right? So that means to meet your goal, that means to have your retirement income go for life, you will need to accumulate $2.2 million, 67. For that family, we need to have 2.2 million. This is actually their financial independence number, right? One way to accomplish that is what? It's to save $1,772 a month, which is $972 more than they're currently saving. And 21% of their income. See, if you're saving or earn, if your savings earn lower rates of return, you would need to save more money. That means if where they're investing their money is not getting the right rate of return, they would have to invest more to be able to catch up.
Yeah.
Makes sense. So now this is what it tells you. You delay saying by just 5 years. They say, you know what, Mr. Based on what you're doing, maybe you need to increase it to 72. You might have to save less money. Makes sense. But guess what? It tells you don't be discouraged. A shortfall is not uncommon. They should save more money. You can't change your retirement age, income goals, and Social Security rate of return. So this is where we actually start doing the work. We have,
and this is real talk, like real talk, not sugar coated. Because that little section right there with the warning part, it's very direct, it's clear, and it's real talk. And I know my dad used to say this, I rather that you frustrate my dream than hide the truth from me.
Exactly, 100%, right? But there's ways, and I'll show you how powerful the financial needs analysis can do for a family. Let's look at the next slide, right?
Yeah, do that for us.
The next slide tells you very simple where you stand. If you do a full screen, right? It'll tell you where the person stands. They put $800 a month, right? 9% of their income. So based on that, they will have $1 million saved up, but it's still $1.1 million short. What does that actually mean? That means here's what it means. How long your savings projected to last is age 78. That means when John and Jane retire at 67, right, they will run out of money most likely by 78.
Wow.
They'll run out of money by 78, right? And this tells you the difference in if they retire at 62, how much you put aside, right? And 67. So it'll tell you everything you need to have. Versus the game we want to have him on is to retire, guess what? In at least 85. We look at life expense at 85, 86. That's the estimate that we use.
Yeah. That makes sense.
So that makes a big difference to be able to make sure people retire, have their financial independence number. So the financial needs analysis tells you exactly, it'll show you comparison from what you're doing from where you need to be. Makes sense? So let's look at the next slide, right? The next slide is debt. So let's put a full screen. Now, this is where it shows all the information, how we gather a person's debt, right? For example, we look their mortgage. If you look at the top, look at the ABC mortgage, right? A fictitious. I hope that's not a company, ABC mortgage, right? Fictitious ABC mortgage, right? This we estimate the balance, right? How much they're paying principal interest, how much the interest rate they're paying right now, right? And it also we added how much of house, estimated how much the house is worth, the monthly, like the property taxes every month, homeowners insurance, and PMI. We add number of PMI, right? It looks at that. So we have that the side for the information. Now, if you look at the other debts people have so we estimate they have a car loan, 21,000, how much they're paying, the interest rate, right? Fixed. We look at the credit card one, they owe 6,500, paying 150. And you see the additional payment. What do most people do? They pay additional, right? If they ask them if their minimum is 150, they pay an extra $50, right? That's what most people do. And if you look credit card too, same thing, 3,500, right? You see the number, interest rates, and it looks at fixed and revolving debt. It tells you calculates accordingly, right? Student loan, this person has some student loans left over, they're still paying. It estimates that amount. Also, credit card 3. So those are all the debts our family has. Make sense? They have $49,000 of consumer debt. They're paying $1,000 a month, but they're paying an extra $100 extra a month on their debt. Make sense? That's how much they're paying, right? And look what this is what we're going to show how the debt stacking actually works. If you look at the next slide, if you put full screen, it actually tells you, right, where they stand. So if you look at that full screen slide, it tells you, for example, that person will be debt-free at 63, 61. That means they'll be paid off all their debts based on a financial needs analysis at 63, 61. They'll pay over $231,000 in interest. It'll take them 22 years to pay it off. Wow. Right? Paying $29.90 a month. Now, where we're going to show you the debt stacking power, right, is we can get that person debt-free at 53 with the debt stacking. 53 debt stacking, which almost 10 years sooner, right? And also save them interest rate paid, only $144,000 interest. So we're going to get them out of debt. Why? In 12 years. Pay everything off. All their debts, mortgage, everything paid off in 12 years sooner, which is 9 years, 6 months sooner than they were before. Right? But look at the power of this, Liz. If you look at, don't stop there. It says once your debt is paid off 53, consider taking a $29.90 that was spent every month. That could have an extra $920,000 at retirement.
Crazy.
So we found the money. So think about it. We can get that person a game plan, be totally debt-free at 53. Then they were paying $2,900 to the credit cards anyway, and debt companies anyway. Now, let's invest that money for your future. Invest that money for your retirement. Look at the power that person might have in the process. And look at the next slide. This is power. Take full screen, right? This actually shows you the slide, the debt stacking, right? Look at credit card 3. We show the person, right? Acceleration amount 150, right? Check this out. 150. They're paying. See the number? It'll tell you when that person we paid off. Then they add it to what? They take the 210, add it to what? To the credit card, paying that off. You see the balance? Your monthly payment. It shows you. So everybody's numbers are different. So it'll look at the numbers. The program, the financial needs, will look at the person's number, look at all the debts, everything, and will calculate for that person how to pay it off faster. You see that? It eventually be paid off in a short period of time. That's the power of that, right? You commit to that, and boom, you can pay it off. And this is not them paying more money. It's the same exact money that they were paying, just a little better. Makes sense?
I love that. Listen, we're going to put a poll up. If you want to do this, you can do a financial needs analysis. All you have to do is comment 1 or comment 2, give me some more information, or just say, hey, this is awesome. If you've already done one with Bernard or with someone, definitely let us know, because then we will be able to look at the comments and contact you. So again, this is amazing. Are we moving to the next slide?
Yes, move to the next slide, right? Now, this is your income protection number. Now, we found that if you put full screen, we found that this person, right, John and Jane, had $150,000. Where you stand, they had based on their goal, they would need to have $547,000 of life insurance, but they only had $100,000 life insurance. Why? It's probably they were overpaying for it. They were paying $150 a month each for the policies. This is what happens. A lot of people get IUL policies a lot of times, right? A whole lot of cash, where you have little cover for a lot of money. So they pay almost $300 for that, right? That means they're underprotected. What we're able to do for that family, looking at that age, right? Give them $547,000 each. That's almost $1 million each for less money. An average, right? Because we want to make sure the person is properly protected, their income, which is the foundation. Make sense? So it will look at your life insurance need. It will look at you, ask you what your needs are, and it will tell you exactly how much coverage you need to have based on your age. Right? Based
on your age. That's the key for us to remember.
Absolutely. So if you look at the next slide, now they have kids, right? This is an estimate, right? Timmy is 7 years old, so have 18 years to start school at 18, right? And it tells you average cost of a 4-year this is public school, right? 4-year public is about almost $43,000 plus, right? So we estimate they might get a scholarship, pay 50% of it. So it'll tell you based on that. So, and if you look at school name, you can actually look up any school and actually put in the school. Actually, it'll tell you how much it'll cost in the future.
That is so cool. How much it'll cost.
Exactly. All right. So if you look at the next slide, and it'll tell you based on that, you will need to have a lot more. It makes sense that person will have to almost $1,300 a month because the cost of this where you stand. See, what happens is college education just goes up so much. The cost of it is just crazy sometimes. Makes sense? But we always tell people this should not be a priority for your finance. This is after you took care of your retirement. Number one, we tell people, make sure your retirements are taken care of. Then you take care of college education for the kids. I always tell people, make sure the retirement is taken care of. Make sure the retirement is taken care of. Then you take college education for kids. Because kids have options out there. They can get scholarships. They can get grants. They can get, financial aid, worst comes to worst, right? Or maybe they'll delay it, and maybe there's options. There's options. You don't have options. You and I don't have options. We don't have a retirement grant. We don't have that. There's other thing as a retirement grant or retirement scholarships. Make sense? So we have to. If we don't fund it, we ain't gonna retire. We're working.
That's right. That's right.
Working. Kids have time to recover. We don't.
That's why it's retirement first.
They can adjust. They can college. Maybe college is too expensive. Maybe there's other careers out there that doesn't require them to spend that much money in college. But there's no option. We have to retire. We can't work for our whole life. We have to retire. Kids have options. You don't. So this is why we make sure you put money for your retirement before anything else. Makes sense? For the kids' education. I know you love little Timmy and Tammy. You want them to go to good school. I know you want them to do better than you, but listen, make sure you're okay. Worst thing, because Timmy and Tammy are not gonna like you if they have to take care of you, unfortunately. Makes sense? Because what they're gonna tell you is gonna be payback on a bedtime, right? Because they're like, okay, now you stay with us, we're gonna put you to sleep early, right? And that's that you don't want to be caught up in a sandwich generation where your kids have to take care of you too. Makes sense? So making sure you are okay. They're gonna be okay. Our goal is to take care of our kids, not the other way around. I hate to sound like that, but that's the way it should be. So we have to make sure that we are okay financially.
Yeah, that's interesting.
Which is good. If you look at the emergency fund, we look at emergency fund based on this person has 5,000 saved. They'll put 500 a month, right? And their goal is to have at least 15,000 because we want them to have at least 3 months of their income saved up. God forbid they have an emergency, and it gives you a goal how much you save. If you look at the next slide, so everything you want to know, it'll tell you exactly what you need to have. It'll tell you, well, if you want to have this much, put this amount of money extra, and you'll hit that goal. Make sense? So it'll show you every little thing that you can do.
I love that.
But guess what happens? We talk about all the time. There might be a challenge, right? For example, most people fall in a vicious trap. Remember, I use the analogy like if you can rearrange your chairs on a Titanic. If that ship is gonna sink, it's gonna sink, right or wrong. Sometimes people need to make more money because a lot of times people may have goals and dreams that are right here, but maybe their income is down here. So there's only two things you can do: either decrease your goals and dreams to meet your income, or increase your income to meet your goals and dreams. And we show people the power. If you look at the middle, like an extra 1,000, if they made an extra 1,000 a month, what could that 1,000 a month do? With not a lot, an extra 1,000, doing something on the side where you make an extra 1,000 a month other than your income. Here's what you can do: you can pay your debt sooner. See, an extra 1,000 a month will get you debt free at 49 years old, and at age 49, right? Which is 13 years and 9 months sooner, right? And save a lot more interest. What can extra 1,000 a month do? 1,000 a month, for example, for your retirement, we can add an extra $1 million at your retirement at 67.
Yeah.
An extra 1,000 a month, right? Or do something else. So there's so much that you can do. Just an extra 1,000 a month. Sometimes you just need to make more money. Maybe sometimes you have to find a way. Sometimes they're just not enough. There's not that much you can juggle. But this is the power of the financial needs now. This is the power that every single person needs to have something like that done. Everyone needs to have a plan because you can see exactly where you stand.
Everything is right there. Yep, everything was covered. Wow.
And you know the crazy part about that, Liz, and everyone, if most advisors, they would charge you anywhere. Right now, they are very upset with me right now. I can tell you that because a lot of advisors, right, they call certified financial, they would charge you anywhere from $2,000 to $3,000 just to get the plan. Just to get that, just to get the financial needs analysis, they charge you from $500 to $2,000, some $3,000 just to get the financial plan. Not even the solution, just to get the financial plan. Yes. And if you look at, there's more details with the financial needs analysis. We can actually make it even more. I mean, there's so much more we can add to it to make it even more fancy. But this is just generic for average family, every person would need.
Yeah.
Makes sense. And we do it complimentary for free. We do that for free. We sit down with a family. We don't charge money for that. We don't charge. We'll do a complimentary for all our clients. We'll sit down with them and say, listen, let's do analysis. And we can do that every year for you.
Every year. And that is the good amount of time to do it. Yes. Go back and revisit because that number is going to slowly change too. Exactly. And as the number, your net worth starts changing and you start seeing that, you're like, oh my God.
Exactly. Oh my gosh, you can actually increase your net worth 100%.
So good. Listen, fill out that poll.
Exactly. So this is why we wanted to, because people are like, should I do it? I don't know. And they got nervous. And why does it entail? Because sometimes people need to see it first before. This is what it entails. This is the information we're going to ask. All right. And this is what is going to generate. This information is going to give you, which is powerful information. It'll give you your financial independence number, which is important. Everyone should know. It'll give you income protection number, and it'll give you a debt freedom day. If you have debts, if you have 2 credit cards, it can't do much. But if you have like people that have multiple credit cards and a mortgage or something like that, it'll tell you exactly how to get rid of it. And you'll find monies that you might be wasting. Find your money. Sometimes even with the budget, even with the worksheet, there's money there that they can find. They can find. Sometimes maybe you're paying too much for your cell phone. You can actually update a plan and save $100 less.
Yeah. And you mentioned a few things during this episode where the money might be coming out of your pay stub and you don't even realize, oh my God, this is money.
Exactly. 100%. That happens all the time. Like I'll look at a pay stub and I was like, what the heck is that? What's that? And like, do you know what this is? No, I don't know what this is.
They don't know. They don't know.
How do you have $200 coming every 2 weeks out of your pay stubs and you don't know what it is?
Yep. So
and I'm
true.
like, that's important. That's why we want to see the pay stubs, because this is where we can find, because there's things there that people don't realize. They're overpaying or not paying. I realize they don't even need.
Yep. Very good. Listen, the email is scrolling. Get a hold of him. Say, this is the time. I have to do it. I'm still in a good place. We're literally just entering the second quarter of the year, and we're still in the beginning of the year. So let's go ahead and make that appointment, sit with him, and have your free FNA.
Yes, 100%.
Analysis report. Thank you so much for this episode. It was fantastic. Another really good one. And I want to be able to push that. This was actually a demo for those who never, and they're probably wondering, what exactly does that entail? You're going to see the whole thing in this episode of a demo of what it's like to do a financial needs analysis. Thank you so much, Bernard. Great stuff. Great info.
Excited.
We're excited for what's to come. We're getting closer to episode 100. We're going to continue
around the corner.
Continuing to move forward, continue to share our social platforms so that our audience can continue to grow and then we can bless other people with all of this great information. Bernard, have yourself a great one. I'll see you next week.
Now. Take care, guys. Appreciate you guys.
Have a good one. Bye, guys. Be blessed.
Thanks for tuning in to the Army Empire podcast. If you enjoyed this episode, don't forget to subscribe and share it with your friends. Join us next week for another exciting edition, and until then, keep building your empire.